All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market, about where it opened this morning, kind of about the same spot. We've seen a little bit of flux here in it, with a small pullback, around the lunchtime period right here. Came back and retested the lows from this morning, which are kind of the highs from yesterday. Broke it just slightly, but from kind of an oversold short-term position. So it bounced off of that nicely. And, we could see the market just kind of back to where, back within today's range, pretty much where it sat all overnight. After the news that the U.S. and China were going to get things signed and rolling here, you can see the volumes have really fallen off. Normal around this time of day to see them fall off, but they've fallen off to a great degree here, in terms of that volume. We do see a reversal going on with oil. Oil's been all over the place. It's been pretty oversold. Broke 60 yesterday. We see it kind of break 59 today. And, it's been snapping on back. We see a little more life coming into some of the energy names, from some of their kind of short-term oversold positions. But just a little bit of an oversold bounce going on there. Now, we do not have any new signals out there for the challenge here today. I'll show you the scans. This is the bullish scan, J&J, Coca-Cola, MGM, and Valero. MGM was on there yesterday. Coca-Cola has earnings upcoming, but it's also not a signal. I thought it could be a signal here, but, it's not a signal, J&J, neither. Now, I've been watching Valero all day. And, Valero and Walmart are two stocks I've been watching all day here. And, Valero, I was wondering if it would be a signal or not, but it is not. It does have a 3-7 crossover on it. But if you remember last Friday, the day where, the U.S. fired on the Iranian general, most energy stocks surged and Valero dropped, and it dropped hard, right? And it dropped because oil surged, right? And you think, well, Valero, they're going to do better with higher oil. No, they buy oil, right? Valero buys oil and creates refined products. So the cheaper oil is better for Valero, as long as a drop in oil doesn't correspond to a drop in, distillate gas and other products there. So we saw Valero drop, and it's recovered very nicely as oil is pulled back, and has continued to strengthen here throughout the day. It is something that, I think is in a very interesting position. And when you look at Valero historically, it can surge off of these levels, but not setting a signal. We did have a lower low come into play, so that's probably weighing on it there. But maybe one small pullback, a little bit higher low, give us a chance to go play that. But Valero, one, I think, worth keeping an eye on. This is a stock we talked about last year. $120 is a very reasonable level for this stock to trade to, in the early half of this year. And I still think it will get there. And it's been a nice little pullback, nice little consolidation over the last month and a half. So when you look at other stocks that have failed to have that, pullback consolidation, where their valuations are getting pretty rich, you then look at Valero and you go easy comparables, trading at a forward PE that's in the single digits, book value of $50 a share. You just have something here, even with a dividend up around 4%, where 120 may be pretty cheap, for Valero later on in several months. So one worth keeping an eye on there. Now, the bearish positions or bearish crossovers, we have one on the board, Vale. Now, Vale and FCX were on the board here just before I jumped on video. If we look at FCX, you can see the downside crossover on the 3.7, and it's evaporating, but neither of these are signals, even if they have downside crossovers. Both are just signs of some consolidation here. I do think, if you want to make a really bearish bet out there, right? If you just are really grizzly and want to make a big, bad, bearish bet, I think you take a look at something like a Vale and some of the 12 puts or something of that nature. Now, that's not, something I think is high probable, but something where you can get it for pretty cheap. And, if there is some heavy disruption to the markets, Vale probably takes a pretty steep turn there to the downside. But again, no signal here on that. All right. So going to go into the close here with cash. I'll be patient for the next signal and then go. Now I mentioned a little bit earlier that I've been watching Walmart all day. I day traded it for a little bit, just one trade. Caught a little bit of a uptick, which was nice. But this is one where we've seen it consolidate, we've seen it pull on back. And I've been watching the pullback, right? Been watching the pullback. And one of the things we talk about when it comes to pullbacks is where do you get in, right? When you're watching something you really like and you say, well, where do I start to jump in, to this stock? Well, the first time and the first place you look isn't on this day right here. It's not on this day. It's not on this day. And it's not on this day. It's not even yesterday. Today is the first day you look. Why? Well, today is the first day where the stock is going or set to close above the high from the prior day. Okay? Now, this doesn't mean that the bottom is in. Okay? It doesn't mean the bottom is in. Go, hog crazy and buy anything, every bit you can. But when you look at the odds, right? You look at the odds of a downward trend stopping, they change dramatically once this type of action happens, right? So now, instead of being in a free fall type of scenario, which, free fall is probably pretty harsh for this pullback. It's a pretty minor one. But this is that first sign where you go, okay, now the odds aren't terribly against me. And that is what we see here happening today with Walmart and seeing that action come in. Now, if you want to play it aggressively, a buy off of today's low is a fairly aggressive play. If you're not worried about getting whipsawed, a whipsaw could easily happen using yesterday's high as a stopping point there for Walmart, but it's going to keep you from getting sucked under by it. And if you look at Walmart here, it had these little two spikes up this morning, right? And then this kind of curve down right here. So this 116.40 level, to me, that's my favorite level for a stop. And that is about what yesterday's highs were there on Walmart. So an interesting one there. One that's, typically not market related, right? It's pulled back as the market's gone up. It's gone up as the market's gone up. It's gone up as the market's gone down and vice versa. It can do all sorts of things, but just very interesting setup here with it on a stock, on a company who, when you look at them fundamentally, I think you can make several different arguments about them, here this year, but my favorite thing to look at, when we're looking at, path of least resistance for the year, are comparables. And what are the comparables here for Walmart? Well, if we look up here at year-to-year growth, revenue growth, 4% quarter-over-quarter, 4%, 1%, 2%, 1%, 2%, 2%. This quarter is projected to be 3%. Next quarter, 2%. Next quarter, 3%. Next quarter, 3%. So, it is growth, right? It's not the kind of double-digit growth that you'll see in a Starbucks or things like that, but it's still growth, and growth that's going to look like, going to look significant in comparison to what Walmart typically is. So, it's a stock that could easily see the 125, 135 level come in, given their revenue comparables. Their earning comparables, a little bit different. They're a little bit, they're out of the double digit days that they were in, kind of early last year. So, this isn't one that I go, well, this stock could double or do anything like that, do anything crazy. Probably not, but, is a decent value right here and does have some, potential arguments to the upside there. So, one that's a very interesting setup here today. I looked and said, do I want to go buy some options on it? Here personally, I day traded it today. I haven't bought any options on it here just yet. I'd like to see what the morning brings here for it. Because a lot of times, something like this, it'll bounce a few days down here near the lows. And so the option values have increased just a little bit. So I'm being picky. And, when I'm picky, a lot of times I'll miss out. But, when I don't, it certainly pays off there. So anyway, that's Walmart. Now, the MarketVibe remains bullish, right? We continue to see the overall market metrics in a bullish mode. If we look at the bullish percent index, it's continuing to rally, continuing to push on higher. We talked about this week, where the bullish percent index, it can't really go up much higher, right? Now, just because it can't go up much higher doesn't mean it's got to go lower, right? We can't make that that type of statement. But the last time it reached these levels was in April of last year. And in April of last year, if we come to the, if we come and put on the price of the SPY, or the SPX, the S&P 500, you can see April last year hit these levels and started pulling back, but the market really didn't pull back for a few weeks, right? It took a little bit of catalyst and into May to get some sort of pullback that was significant here for it. This is, for me, from a comfort level standpoint, when I look at the market and I go, do I want to be a big buyer or something? It's not a comfortable position to be a buyer in. Right, but it's also a worse spot to be a seller in, because you're pretty much trying to top pick. You don't really have any real stuff to sink your teeth into here just yet. So it is still strongly controlled by the bulls, and we could be in for another several weeks of that continued grind here to the upside in things like the bullish percent index. Now, one thing we saw a pretty big shift in this week are the sentiments. And, sentiments will shift around news, right? And this sentiment shift, we saw the bullish number drop 4.1%, right, to well below the historical average. We saw the neutral number drop, and we saw the bearish number pop by 8%. And you go, wow, with the sentiment shifting this much to the bearish side, we still have a market that's sitting at all-time highs, right? And this is just one of those where we talk about the sentiments, and you can look at them in a contrarian way, but it doesn't, there's not a historical precedence to say, well, every time it's contrarian, it's got to go the other way. And right now, we are sitting in a position where the market has been very under bearish, right? Very overly bullish, and the bulls continue to take things on. And, you hear the term Teflon market, right, where nothing sticks to it. It just continues to go for the bulls. And that's the type of market that we continue to experience, continue to see. Now, historically in these type of markets, when the Teflon wears off, it wears off pretty heavily. But we're dealing with a market right now that, has some good earnings arguments to talk about the upside, and has some pretty good economic arguments to talk about the downside. So it's a very interesting mix, and it is one where A lot of times the earnings are going to win out over the economics because investors will say, "Hey, you know what? I expect the economics to eventually play catch up there." All right. So overall, still strongly controlled by the bulls out there in terms of the metrics, in terms of the sector performances, the cap performances, even global market performances, continue to, show ratios of movement that are still, for the most part, in the bulls' favor. And, the bears are still trying to look at things like a MACD and go, well, we have momentum. Is it wearing off? And trying to make arguments that just simply are, yeah, they're arguments, but they're not exactly fantastic arguments there for it. Okay. Alrighty. Well, thanks for hopping on. Have yourselves a fantastic day. We'll talk to you tomorrow. Take care.